Hey folks, Dan Frio here with your closing bell report for July 12th, 2024. So we're seeing mortgage rates, they eased a little bit more today down to 6.82. What's really going on behind the scenes? Well, a lot of good information came out this week. It came out on the inflation front and some other areas, especially the jobs reports. Here's my concern. Okay, we see inflation coming down right now, but my biggest concern is right through here. The Dow Jones jumped over 400 points today based on now the Federal Reserve seems to be in the track of cutting rates in September, and everybody's telling us that. So the concern that I had, and probably the Federal Reserve had, is once they come out and actually say this, mortgage or bonds are going to probably plummet, and we're going to see the stock markets or the equity markets go up quite a bit. And well, that's what we're seeing. So if you go over to the reports, here's what the Dow Jones has done over the last, I'm going to say 2-3 days. Well, let's just say 2 days. So on July 10th, you can see right over there, the figure was 3,000 or 39,250. Where is it today? 40,250. So it went up 1,000 points, 1,000 points in 2 days. Okay, that's creating wealth for people. Okay, I'm going to show you that right here. Here's what's going on. Here's disposable income for our economy, basically back from, well, let's go all the way back to the beginning of time. If you go all the way back to this chart, you can see basically in 1960, here's the disposable income chart issued by the Federal Reserve. Okay, so unless you don't have faith in the Federal Reserve, let's get to these numbers. So the first thing I want to go over here is, here's what people used to do. They used to save money and they'd gradually save, trying to get a better life for their family. And then all of a sudden, what happened here? Sheesh. The assets of everybody, or disposable income for everybody, just skyrocketed. Well, what happened during this time frame? COVID. Well, why did this happen? Because everybody basically, didn't you lose your job and everything just went bad? Well, I'll tell you what happened, and I predicted this 2-3 years ago. What's going to happen is, well, people are going to continue to work on their jobs. A lot of people. And again, guys, this is representative right here. I'm not trying to make this stuff up. I'm showing you how and why this happened. Okay. A lot of people stayed working and then also got benefits from the government. Okay. Some of those benefits are this. You might not have been given any assets or a check, but you had the ability to not make a mortgage payment for up to 18 months. And you had the ability not to make a student loan payment for about 2-3 years. So if you didn't have a house payment and you didn't have a student loan payment, what would you have? Well, most people, they didn't have much because right through here, all that money went into the bank. And then they depleted it really fast. And then that's when everything started to get scary. So when you're looking through this area, they gave all the money back and then they started getting into a deficit. Now, what's happened since then? Well, this has happened since then. The markets go up and up and up. And what we're seeing now is the wealth effect that you're seeing right through here. So you have cryptocurrencies doing very well. You have the other equities. NASDAQ is hitting record highs every day. You have the Dow Jones hitting records. That's what creating a wealth effect. And that's why people are spending more money. And it's really hard to get that sticky inflation number down, but it's coming down. So our goal here is to help maybe change your mindset. It's like Jaspreet Singh. He's a buddy of mine on Minority Mindset. He's like, I said, why did you name your channel that way? And he said, you got to get people's thinking differently. Because I know the comments down below are going to be, Dan, I got no money. I have no assets. I have nothing in the bank. I don't have a job. I don't have this. Well, maybe you need to get your finances in line. So that's not for me to do that. But in my videos going forward, every day or every couple of days, I'm going to try to give you insights on what I'm looking to do with my assets. You know, I do have positions in stocks, equities, ETFs, cryptocurrencies, bonds, CDs, and things like that. I'll give you some of the ideas on what positions I'm in and why. And I'm not a financial advisor. I don't want you to trade off of my trades. This is just for educational purposes only. But our goal is to change your mindset into, even at church they say this, from being a victim to a victor. So without further ado, let's get over to see there's really, the news out this morning was in regards to producer inflation. Those numbers came in a little bit hotter than expected. So I thought the markets were going to do really bad. But here's what's going on with mortgage rates right now. What we follow on this channel is the MBSs. This is how I know what's going on with mortgage rates. So we follow the MBS market. What is it? It's actually a bond that trades on Wall Street. You might have it in one of your portfolios if you have a 401k or something like that. So how we monitor rates is right through here. This is what's happening to the price of a mortgage-backed security bond. So what you need to understand is the price and the yield are inverted. So let me explain it this way. If the price goes up, rates are going to come down. Okay, if the prices go down, rates are going to go up. Let's just see what this has done over the last, just say 2 or 3 days. You're going to be hopefully pleasantly surprised. Let me go to my chart here and pick a 2-day chart. This is the 2-day chart. If you can see this, let's open this up a little bit further so you can understand it. Right through here, this is where the market opened, and it went all the way up to here just the other day. And this was on the CPI number. The consumer inflation numbers came in better than expected. So again, when this number moves up, the price of the bond moves up, yields come down. And that's where we're seeing rates right now down. It was about 7% or maybe 7.25% at the beginning of the week. We're down over almost 0.3% just this week. So nothing but good news, but the scary part of this is with the equity markets and the cryptocurrency markets rallying like they're doing, that might create a wealth effect, pushing inflation back up again. So that's one of the biggest concerns the Fed's going to have, and that's also one of my concerns. So what do I do? How do I do it? Why are you watching me? Well, you're probably watching me because you're interested in real estate. What's going on with mortgage rates, how to finance properties, and so forth. So if you want to find out more about me and my team, just visit us at therateupdate.com. Here's our website. If you're looking to buy your first house, what I want you to do right now is stop and click that button right there. It's going to come up with some grant programs that we're offering at this time that are basically free money. You don't have to pay them back, and they're not a lien on your property. But if you want to just get the application process started to see if you could qualify for a house, I don't want you to disqualify yourself. Please reach out to us for some assistance so you can go walk through each question that you have and kind of paint a scenario of what would it look like if I bought a house. So that's what we do here. You can start right now at the Apply Now button, click that, and you'll be on your way. But if you're like, hey, Dan, can I call you? Can I email you? Yeah, you can do that as well. Just scroll right down through here and you're going to find all that information right there. You can give us a call at 844-775-5626, or you can email me directly. Yeah, this is me at dan@therateupdate.com. So that's a report for today, guys, the closing bell. I hope you have enjoyed this fantastic weekend that's coming up, and I'll be back on Monday. Take care. Have a great day. And if you haven't done yet so far, if you haven't subscribed, please do me a favor and just subscribe down over there before you go. See you next week. Bye-bye.